Okay, let's start this up here. Hey there, it's Ed Keen. I am the Progressive Investor .us, and here we go. We're going to go through and we're going to be checking out Tesla stock here. All right, let's close this up in the background here. Okay, there we go. So what we're looking at today is we're looking at what happened on Friday. It was crazy. We were looking at that stock as it went through, and then as it kind of broke, we're seeing a different. Let's just close this up back in the background here. So we saw this. This is the whole day from 9:30 open, kind of dancing around here, a real early shot up to 674, and then in the end, in this last hour, right down, starts to come down. Now what was really happening is, at least on the open market, there's a lot of people who had bought stock just for this, and then, you know, if you're an investor a little bit, or an amateur investor, or a retail investor, what they call, you end up in this mode where you're like, oh my gosh, it's gonna drop. It's dropping. What do I do? And so you get all these red candles just going down, 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 down. So we've got the 5 minute. We're looking at the 5 minute now. But if we're looking over at, we come back to here, 1 minute. Here's what's happening, right? So it looks a little bit less dramatic, but it's happening in here, right at 1535, right? Right at 335, big dip, then it goes up, then it dips again. I was busy with some other stuff, so I come in right here, right? I come in and I'm looking at this thing. Basically it going up and down, and what it actually looked like in real time was it was all over this real tight distribution. And I'm watching it, and geez, I'm like, I'm waiting, right? Because so I had you know, full disclosure here, I'm invested in it, but I also was playing some call options, and they were well in the money no matter what was happening. Not, but they were dancing up and down here. So eventually, with about 10 seconds to go, I put in a market order to sell because I really didn't want to end up with a couple hundred extra shares, just because I don't really have money in my account to cover that. So I was just not ready to buy these calls, and it shoots up basically in the last moment. And what someone's done a tick by tick analysis, it turns out that a lot of this stuff happened in the last 5 seconds, or even at market close, right? So they call these things that they're not kind of open here, but 69 million shares got sold in this thing. So something maybe called a dark pool, which sounds ominous, but I guess it's just invisible to the typical retail investor. So we're not seeing it. It is still reporting to the markets, but it's just kind of a little bit of a way that rich people can make a little bit more money, right? So anyways, this happens right at the same time. 695 is the high and the close. That's because there's 69 million shares, and there's this many people willing to sell them at this 695 price, but not willing to sell them at the 677 that other people are selling them down here. 665 looks like it crosses over at 665 for the rest of us. 680, right? So 662, 64, right up to 695. So what does this mean for us? Because did this really, what happened after, right? So now you've got 680, 674. You've got a bunch of these spikes happening all the way through the evening until the 8 o'clock close of aftermarket trading, right? So There you go. So at the end, 76. So it looks like this. When you zoom out, what happens in after hours tradings, a lot of these things hit it there. And again, the index funds are trying to index to the index, right? So they're trying to make a really close approximation to what the index is doing. And the index was valued at 695 at that time. So did they sell it off? According to some estimates, the volumes suggest that they might have got everything they need. So what does that mean for tomorrow morning? It's 11:27 now on Sunday. Market will open for pre-market trading at 4 a.m. So you'll see whatever happens here. So this is what's happening. You know, this isn't investment advice. This isn't, but you know, this is basically me working it out myself on the camera, but trying to figure out what's going to happen here. No one can know, but here's a few things that are interesting about this. If you're a long-term investor like I am, thinking about what's going to happen to this company in 3 years, in 5 years, in 10 years, and all the signs point to a really successful company, really great technology, and not just in cars, but in solar panels and in Tesla Powerwalls and retail, or actually industry scale battery storage, all this stuff, and being right there with mining, potentially where are they growing? If they grow into Indonesia for the nickel, previously I had said it was magnesium, probably confusing, manganese, nickel. Apparently manganese is a little bit cheaper and can augment in that role for a little bit heavier but better battery than just the iron phosphate. So anyways, you got this nickel possible battery plant / gigafactory potentially, right, in Indonesia. So of course Indonesia has rules. You can't just take their minerals and take them out and process them elsewhere. They make it so that you have to be processing it there. You're sending out products. So at the very least, you're sending out batteries. But heck, there might be a great labor pool of skilled workers or semi-skilled workers or people who are ready to learn and do the work there, and maybe that's a potential labor pool for another great Tesla gigafactory. Wouldn't that be great, right? So making, expanding that Asia market, because this is not a company that is just located just in Detroit or something like that, where they're just one thing, they're making one thing. This is a company that makes the whole thing start to finish in one factory, including now the batteries. But it's not like traditional auto manufacturers are actually kind of assembling a car. They buy the seats, they buy the engines, they buy the engine parts, all the electrics. It all comes, and they put it all together, make it into a car, and that's it. That's the manufacturing process. Instead, the Tesla model is very vertically integrated. So they're building everything. I don't think they build their own tires, but they probably build the rims, or maybe they don't. Who knows? Maybe there might be some aspects in there where it's better just to get market based stuff. But then from the frame to the battery pack, a structural battery pack, making the batteries, making the structural battery pack, casting the frame of the Model Y, basically doing everything in factory, painting it and getting it out, and then with the Cybertruck, which I'm excited to be having an order in for. No paint, right? Because it's going to be stainless steel, some kind of stainless steel X, right? Whatever it is that is one component of it is unknown, right? It's the stuff that they're making these huge starships out of. Pretty cool. So your car's not your truck's not going to rust. Well, that's pretty cool because every car I ever knew rusted, right? And I live in the northeast of the United States. They just salt the roads like mad, and everything rusts, right? So you got actually it's a lot better now than when I was growing up. But we had this old Dodge Dart that was just kind of rusting in our front yard. It was being saved for, when I could grow into it maybe, but or whatever. Being saved, eventually got sold before I ever had it. So, but there you go. That thing was just rusting. I remember this patch of rust that just kept expanding. So if you think about a Cybertruck being all stainless, and maybe other vehicles, that thought, if the Cybertruck's really successful, maybe that's what they're basing off of this $25,000 car. I mean, wouldn't that be great? A car that never rusts, has a battery that'll last 1,000,000 miles, all those things, right? Building all that technology into it, and so what? Let's bring this around to the stock price, right? So people are expecting a drop at some point tomorrow, or this week, or whatever, because they think that the index funds have been able to acquire the stocks that they need in order to follow the index. Great. So if they have, then then that might suggest that some of this buying and selling that was lower was for these guys grabbing it, putting it in their dark pool, selling it at the exact price to these index funds, because the index funds don't want to have a lot of extra money. They want to have it be exact, right? So doesn't make sense to me, but if you're going to track an index, you might as well get it right. So they rebalanced to that. 695 is good news for anyone holding long, and then people watching for what's going to happen tomorrow morning at 4. So what happens? And I really don't know. The real strong possibility is that there's a drop. There's going to be a little bit of a drop, and then maybe a little build, maybe not a drop because of this decreased liquidity. Now you've got all these stocks off the table, right? So you got all these guys hold, underperform. You got a bunch of analysts that are out here, and then you've got these strong buys, and buys still at 675, 677, and 695. Because what's happening again, it looks really strong for Tesla to have actually made that 180 something thousand and make that 500,000, 500,000 cars delivered in 2020 in the middle of a pandemic. They went and they problem solved. They did all this stuff. So what are you getting? And as a progressive, why do I care, right? I mean, why do I want some guy to be a billionaire? I don't necessarily want, but I want people investing in America, and this is the system we have. So, where I would fall is somewhere, probably, well, I would hope somewhere closer to Bernie Sanders, right? But because I don't want a revolution. Nobody wants a revolution. It's crazy. Nobody wants essentially turning everything around to in a radical way. But these things have to change, right? So I kind of think of the Star Trek model, right? So what is the Star Trek model? In the end, everybody has all the energy, all the stuff that they need. Now they're only talking about military people who are going to space. So Star Trek is the actual USS starships, right, that are up there, the USS Enterprise, right? So you've got this the Federation of Planets, I think, and they're all together, and everybody's got all the stuff they need, and people start prioritizing differently rather than trying to accumulate mass wealth. Of course, here you are. You're trying to get a little bit of wealth because why not? But also because you're an investor in something that's really positive and growing. That's an important part of this too. So what happens tomorrow? I say you'll see a little bit of, if I was to imagine what happens, there's going to be a little bit of information I'll learn if we'll watch this at 4 a.m. And what's happening? Is it going up? Are they going to catch a bunch of these things, hit this 695? If some of these places did not get it, they'll try to get a few of these lower sellers into maybe those dark pools, and hit another chunk of 695 for all these places. Get this all ready to go, and then right in the morning you got a 695 price, and there's a little bit of momentum at that point, right? Because people are thinking, okay, well, do you really? So we got this idea of FOMO, right? Fear of missing out, or fear of losing out. Follow. Who is that saying that? One of these YouTube guys. Sorry, I can't attribute it. I'm sure this is an idea. Fear of losing out or fear of missing out. So if you are missing out, means you're not going to catch one of these rises. Fear of losing out is you hold it too long and it drops down, and you could have sold it at the top. Now, I never hit exact top or the exact bottom, but you can watch these trends. So if you're looking at the trend down here, they say the trend is your friend, right? It keeps coming up. But a lot of things changed on the end of this trend, right? So now here we are at the top of this trend, and there is, remember when we were looking at this through October 2020, we were looking at this rather long period after we were told S&P inclusion would not happen. We're going along like this, click, tick, 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 and then on the notice of S&P inclusion, now the day before that was trading around 407, 400 something, even might have touched, and I remember being a bit concerned because I had, the way I was invested, I was in a little bit of risk because I had a little margin out, still a little margin out, but so you're just playing too much in this because it's bumping up and down. So then in this last month, it went from on about the 24th of November to now, or actually a little bit before the 24th. 24th just means something else to me because I had I'd bought something. I'd bought an option, a call option on that day, 1 month. So here we are, watching that all play out, and it's up 70% from there. So a little bit crazy. Again, don't follow. You can't follow my advice because it's already happened, right? Past is in the past. So not financial advice at all. It's just more like entertainment to kind of figure out what somebody else is doing. What I'm learning about myself is, you're trying to catch the top and the bottom, and then when it's falling, you're like, is that gonna? That looks bad. That's gonna keep falling. Now you always get, there's gonna be all these people that are in this hold, underperform, sell camp, right? There's this guy. I mean, it's comical, really, when someone's rating a growth company based off of P/E ratio that's more similar to an established company that has built a factory in 20 years, went bankrupt essentially 12 years ago, right? So you've got all these companies that that you're modeling off, and they have these P/E ratios, price to earnings ratios of about 7, 7 times the stock value is about the market capitalization. So the earnings to the stock value makes a market capitalization that's much lower than Tesla. But Tesla is about 12 companies, all under the umbrella and vertically integrated in this one name. So pretty cool. You're not exactly talking about this. If you were looking at any of these as a growth stock, if you were just looking at Tesla Powerwall and you're going, okay, well, what could this company, this Powerwall company, what could they do? Well, you might value them at some amount, right? So, what about this car company? Okay, well, obviously everyone's looking at it as a car company, but if you're looking at a solar panel company, well, these engines would be great generators for wind energy too, possibly, right? So, or is there other options? wave energy, all these other ways of kind of converting electric engine power, whether that's like the deceleration, like the braking, charging the batteries, or whether that's actually integrated into a system, a dam, wind turbine, wave turbine, lots of options, right? So all these things that you're constantly dealing with, right? You can be looking at Tesla as possible. Now they haven't invested in any of those other things I'm talking about. Those are all purely speculative, but they're also the things that the technology could do, right? So solar panels, sure, that's easy, relatively, because it's been being used. It passed parity with coal, I think, about in 2016. So for those of you out there who are thinking of like starting a coal mine, well, if you would take that same amount of money and put it into solar power in that same space that your coal mine was going to be, you wouldn't kind of create all this destruction, all this effluent from your tailings pond and all that stuff, and you'd be making more money. I don't know about the area argument, because there might be some depth things, but I'm just spitballing here, right? So, but it reached grid parity, so now it's the cost of the land, and it turns out that if you're building these structures over other things, there's advantages, right? So plants can grow well around these solar panels. That'd be cool, right? So you can be growing something underneath there and getting just a little bit less intensity of the sun, because you're taking that for power, and the rest you're keeping your water. You're doing better management there. You're not losing so much water, etc. Or over a parking lot, right? If you had a solar farm over top of a parking lot, who wants to be in a parking lot? This parking lot's so dang hot. So you could have a solar panel up there shading everybody's cars. Everybody wants to go and park at the whatever, right? Park at the Walmart because they've got the solar system, the solar panels there that'll keep your car cool. You can charge up, go in, have a whatever, right? So there's that. There's lots of potential here. So less liquidity because S&P owns so much of the stock, it's not going to be traded. Then you've got a bunch of us trading. If the retail investors are trading much less stock, maybe that's going to push it higher. And also we're about to have a few good catalysts come out too, right? So that actual number, did they hit 500,000 cars for this year? Up a target they set apparently in 2014. So pretty exciting. So check it out. It's going to be really interesting what does happen tomorrow. Again, keep your popcorn ready and just ready and watch. Pretty exciting times. Oh, by the way, the stimulus passed in the House and it may be voted on in the Senate. It does mean that Americans are getting a $600 check per person for adults, not adult dependent somehow, like not your university student. Crazy. Why can't they pick it up themselves if they're as a dependent, if they're not taxed as a person? Somehow they're getting cut out of this bill. Anyway, sorry, I don't have any of those kids, but I do feel like they are a big part of the economy. Spending a lot on their education and spending on living in places trying to get those educations. But so we got that stimulus, and that's a little positive catalyst for what's going to happen in the stock market. Stock market seems to be, if you were to guess, would you have guessed at the beginning of the pandemic that stocks would be up now? I mean, really. But this is about that K-shaped recovery, right? So you've got a lot of people. So you're here, you're ticking along, and then the rich get richer and the poor get poorer. That's your K-shaped recovery. And the stock market is a kind of classic example of that. But if you support that bottom of the K, hopefully you'll get some things working out. There's the vaccine, there's the stimulus, There's some other things. There's new management in the White House coming up. Some very positive signs for stability, hopefully. Pretty interesting. All right, so we're in interesting times. I'm not selling, personally, I'm not selling stock. I don't believe there's anything that could have me do that. I do have a call that has done really well, and I will be letting go of that sometime this week, and I'll let you know when I do that. And it may be, I'm just going to react to the market forces of the time, whatever that is. So, all right. Well, you guys have a great week. You know, this is a play thing, right? Like, if you're doing this to get food on the table, maybe don't, right? It's not exactly. I say it's a long-term play, which means I'm willing to put it there that it's investing in the company's being supported by my investment, and the company's able to do more because there's more of us investing in it. It does seem a little bit detached whenever I think about the stock market. It's not exactly a straight line to be able to get that money into the company's hands so they can do something with it. But actually, when they're doing these capital raises, like the $5 billion they did last week and a half ago, you know, that's how they're getting to have an extra $5 billion on hand so they can go and make another gigafactory, go build a factory in Indonesia, go and drop $100 million on you know, the whatever the thing they need to be able to reverse the whole factory in Germany. All those things, a lot of silly things, a lot of you know, obviously a lot of political things that I'm not really too keen on, but that's why we're investing in a company that we think is doing pretty well, is trying to do right in the world. Not hearing about a lot of you know, environmental catastrophes caused by this, other than this cardboard farm being cut down in near Giga Berlin. A cardboard farm, as in the trees were being grown in order to be made into cardboard, right, or paper stock. So you know, they're worried about something there, but you know, it's not a natural environment. It's not an old growth forest. It's this other thing. All right, so that's what you see here. German court rules Tesla must stop cutting down trees at parts of Berlin Gigafactory. They're still really busy there, so they're continuing to work in some areas. They're not working in other areas. Okay, you know. All right. Well, good luck, everybody. Stay safe in this environment, COVID and all that stuff, and trade safe. Right. Take care and keep investing in progress.